From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 24th, 2018. Today we're taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. Looking here at the daily time frame, we can see that the market right now is not really in a trending mood. Previously, of course, we saw the downtrend from the black box at the top of the chart, and the market significantly moved lower from all the way up here into the 1.24 and 2500 level, now all the way down here into the 1.17 to 15 level at the very bottom of the trend. So definitely not trending right now as we see for the past couple of weeks, more of a consolidating triangle, the market just moving into a tighter and tighter range as the market creates lower highs and higher lows. You can see the black and the blue trend line here delineating somewhat of a consolidating triangle here for the euro dollar. Two areas within that consolidating triangle that we're taking a look at is the blue shaded area, 1.1705, 1745, which is the resistance right now within that triangle, and the yellow zone, 1.164520, which is right now the support within that triangle. So these become our potential entry opportunities. If we're going to trade within this consolidating pattern, we would look to enter or exit trades at the blue or the yellow shaded area. Because why? That's what the market's been doing. It's been entering and exiting trades at the blue and the yellow shaded area. Zooming in a little bit on this, and you can see, just going back for the past couple of weeks, the yellow zone being support. So if you were going to buy, common sense tells you the best place to buy would be the yellow zone for the past 2 weeks. If you're going to sell, common sense tells you the best place for the past 2 weeks to do that is the blue zone. Yes, eventually we're going to get a breakout. It's going to break below the yellow zone or above the blue zone and begin a new direction. But at least for the time being, we're seeing the market stay within those boundaries of resistance and support, and really what this triangle pattern has been doing for the past couple of weeks. So without any major significant news on the calendar, I think we can maybe take a chance on this. Selling into the blue zone, our risk is pretty simple. The risk is we don't want it to break above the blue zone. So if we decide to go ahead and dive into a sell, then our stop loss is going to be just above the last highs. Yesterday's high really becomes our stop loss target for any stop loss that we take on any trades today. So if you sell the blue zone, stop loss just above 1745. That way you can minimize the risk and get out if the market decides to do something different, which is break the blue zone. Of course, any sells, the target is the yellow zone or lower if it breaks the yellow zone to go lower. So that becomes the opportunity. We clearly, at least, would say don't buy it right now. You don't want to buy underneath that resistance. Obviously, for the past couple of weeks, it's not been a very fruitful. A little bit of profit could have been seen here on the attempted breakout here, but it wouldn't be very fruitful to buy underneath that blue zone, 1705, 1745. So don't buy it today. More likely looking to go short into that blue zone. Risk is above it in case the breakout happens. Again, no significant news on the calendar today, I don't think, to give us any real solid expectation we're going to break this pattern today. Let's look for the US dollar to make some sort of rebound today from what it did yesterday and head back down towards the yellow zone for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.